What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we are back with everybody's favorite series, Crazy Wall Street Bets, courtesy of Wall Street Bets on Reddit. So if you were excited for today's video, as always, make sure you smash the thumbs up button, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. We're going to get right into it here. And again, these videos are made to bring educational awareness to the stock market industry, not to put people on blast and everything else. So hopefully you are able to learn something new, hear my insight, hear my perspectives of things. And again, all the posts are completely anonymous. So we'll get right into it. A little bit of a shorter video, I think, today. Not as many crazy bets, but still some very good educational points. And we're actually starting off pretty strong here. This person right here, and I've read through his posts and he also has a lot more screenshots and everything like that. He has turned like $8,000 into $232,000 in 1 week with SPY call options. SPY call options, SPY put options, Palantir put options. He turned $8,000 into $235,000. Now, he says that he's going to take a lot of this money and then put it into the S&P 500 and dollar cost average on his post, which would have been my first advice if you're YOLOing money like this. So, but that's an absolutely insane return. Now, is this going to be, again, is this guaranteed? Of course it's not guaranteed. You know, and does that mean that you should go right in and do the same thing he does? Absolutely not. It takes a little bit of luck to have this much of a return in this short amount of time. In my opinion, at least, it does take a little bit of luck, but probably a lot of skill was still involved in the making of this money here. But I do appreciate him saying, hey, I'm going to take my money, I'm going to put it into S&P 500. I'm going to have a little bit of money to have fun with, and that is about it. So unbelievable. He said he's 21. Again, we can only believe so much on Wall Street Bets. If he's 21, that's absolutely amazing, but we don't have, the proof of that per se. But an unbelievable return, but a learning point still nonetheless. Trading these options right here is very, very risky in terms of, if he's doing 0 DTEs or he's YOLOing money in. And these people, when you jump onto Wall Street Bets, just make sure that not everybody has this kind of scenario, okay? A lot of people lose money more than they make money, okay? So something to keep in mind about as, we go forward here. And but again, it's an unbelievable return. And I wish I could do something like this. And this guy made an absolute fortune. And look at these drops, though. It's crazy. Look at this drop there. Like, this will give me heart attacks. Look at all these drops you're seeing over the week. That's absolutely crazy. But shout out to you, my friend. Unbelievable returns. And I respect that you're going to take the money and put it into the S&P 500 to then be able to hopefully set yourself up nicely for an early retirement. This next person said he is an NBIS investor, which is Nebius. They've been on a tear recently with the announcement of partnering with Microsoft, I believe. They've announced another partnership, I think, with Meta as well. And he bought shares at $98. He bought 10,000 shares, $98, which is an unbelievable amount of money. He bought literally almost $1 million worth of NBIS as an investor. And he's currently down $127,000 because it's had a big pullback recently. As a result. Now, there's nothing wrong with this. If you're bullish, this company was over $100 and something at one point. If it goes over $100, great, awesome. And you can just sell covered calls in the meantime. You bought shares, you didn't buy options, so that's a really good play as well. Can this have a nice rebound? Of course it can. Can you hedge your position short term by selling options against it? Of course you can. But an almost $1 million bet on Nebius investing is absolutely crazy. We obviously can't see what his portfolio allocation is, so we don't know if it's a full port or maybe it's a small percentage of his portfolio. But that is, it's not, if you believe in a company, you're strong in a company, and you buy in at, your average is $98 right now, and you've got $1 million into it, but you bought shares. So as long as you got those shares, you can't realize this loss until you sell your shares. So as long as you don't sell your shares, you will be good to go. So, if you have the conviction, stay with the stock, you have the shares, take the time, sell some options, use that premium to then reduce your average cost even more, whatever it is to kind of help you to manage your position. Or you could be like this guy who also did full porting into NBIS and IRA. Now, here's the thing that I don't understand with this one, okay? Because the previous guy, we don't know if he full ported it or not. So I can't assume that he full ported. This guy said that he did full port the entire position here. Now, here's the thing to kind of keep in mind about with these two companies. These two companies have been on an absolute rocket ship this year. IRA especially, NBIS also, been on an absolute rocket this year. Like their percent returns are crazy. And if you were thinking to yourself, man, I'm going to full port into both of these when they're at these crazy evaluations, these crazy high valuations right now, that's a mistake. Okay. When you have a company that has this huge run up, this huge takeoff over the course of the year, and a lot of momentum and a lot of volume and stuff like that, at some point you're going to see people start to take profits, and maybe they come out with news that's not sitting well with investors, and like, I'm taking my money out here, I'm good to go. If you wanted to get into IREN and NBIS at this moment in time, I would have taken this money, I would have dollar cost averaged it. I would have done like a little bit, I would have done like 10,000, 10,000, another 10,000, another 10,000. Because now you're playing at all-time high valuations, and as you will see, you now are down $42,000, almost $43,000 already, and that was just from last week, so he says. So, again, if you're buying these companies that have a lot of momentum behind it, you got to be mindful that there's going to be a cool-off period, and there's also going to be some profit taken probably at some point. Now, the good thing is that he bought shares and not options. So, again, just like the previous guy, same thing I would suggest. Sell covered calls in the meantime. Maybe wait for a little bit of a rebound first before you sell covered calls, because a covered call now while you're down in these positions is probably not going to be as worthwhile as to maybe when you get a little bit of a rebound, hopefully. So if you get a little bit of a rebound in these two companies here, then you can jump in and sell some covered calls, would be my thought process to do. And that way you can at least offset those potential short-term pullbacks, because now you're trading these companies at some pretty high valuations now. I'm not saying they're bad companies, but just something to keep in mind about but buying stocks that are at their all-time highs. It could definitely lead to some significant pullback in the stock price. So keep that in mind as we move forward here. This person said this is why you hedge, and this hedge is absolutely crazy. Now, before he said there to say fridge, he's shorting or he's selling short-term options against SPY, which he is in this case. So he's selling short-term calls against it, and someone on Reddit was like, "Oh, these are naked calls. You can't do naked calls. Like, it's a crazy amount of money here." He's basically playing poor man's cover calls. Basically, the idea behind a poor man's cover calls is you buy some leap options on a stock, like SPY, for example, or NVIDIA or whatever. You buy some leap options on the stock, which again are going to be 6 to 12 months out. So you're looking at like June of next year, December of next year, maybe. You're buying them really far out. And then in the short term, you sell some covered calls against it. It creates what's called a diagonal or a poor man's covered call. What this really does, though, is that you collect some premium to hedge your portfolio as a result of it. And even if his leap options go down, they're not losing as much value because there's a lot more time on their side in the leap option. These are going to lose a lot of value quick, but the other ones don't lose value as fast. So, and if SPY went up to say 681 or 682, whatever the case would be, say SPY went up to this or to wherever his strike was. I don't know, maybe it was like 670 something, I'm going to guess. Whatever his strike was, if it goes up to that one, he could not only close these out, but he'll also be able to close his leaps out for a huge return very quick. So nothing really bad with this one, and this is going to offset his, how much money he made or how much money he spent on the leap options, right? So if he spent, $300,000 on leap options, which he showed in a different picture, I didn't feel like putting it up, but he spent $300,000 in leap options, but now he's made $180,000 here. He's already offset his cost base by about 50%. That's probably not the case, obviously, but just as an example as to what you'd be looking at here. So it's a poor man's cover call strategy. I've been doing it a lot with companies that I think are due to rebound. I bought some leap options, on Stanley Toolworks. I bought some on Otis Elevator. I bought some leap options on Webull. I'm selling covered calls in the short term to kind of hopefully hedge my portfolios, to hedge that, short-term volatility. And so that way I'm able to reduce cost basis, which means that in the long term, hopefully, I don't have to do as much. Oh, I did it on Chipotle as well. If you took a look at that video, I hedged that one multiple times, and now we're hoping for a rebound in Chipotle because Trump just cut tariffs on grocery stuff like beef, vegetables, which is a lot of what Chipotle's got there. So, hopefully we get a rebound there. But again, very good hedge here. Again, he's not naked in terms of shorting this. He has leap options that kind of cover this idea here, that covers these options. So, but a very good thing. And again, a very good piece of advice, hedging your portfolio. The market is in turmoil right now, as in we have no clue what is going to happen on December when FOMC comes back to the table. We don't know. And that is why the market is shaking out a lot of money right now. And that's why it has been bleeding for the last week, basically about a week. We had some really good gains in the early morning or in the early of the week, and we lost them all and gave them all back by the end of the week because we don't know what Jerome Powell and the Fed are going to say with rates in December now because of this government shutdown. So crazy stuff ahead of us, as we already know. I would like to know what the average volatility is for this year because this has been probably one of the most volatile years I've seen in a long, long time. And it wouldn't be in the Wall Street Bets video without an open door. Now, this person is actually up $163,000 here. He has average shares at 78 cents. He showed a picture of him exercising his call options that were 50 cents each, I believe. So his next picture over here was him saying that he got exercised at the 50-cent mark, or he exercised his right to get the shares at 50 cents each. He's up $163,000. Now, what could this be good for? He can now just sell a crap ton of cover calls, make some more money, and then be all set and good to go. So absolutely unbelievable trade there. It's a meme stock trade, but it's a trade that worked out very, very nicely, and I cannot be mad about that. Next one here. Everyone YOLO'd, so I YOLO'd. Don't say that. Don't do that. That's a bad idea. Personally, bad idea. Okay. If everyone else is YOLOing, you don't have to go YOLO with them. Okay. And he YOLO'd in 87% of his portfolio, 32, almost, he put in actually 40,000. He's already done $7,000. Put in $40,000 into Webull stock. And again, he bought some shares. He's got some options here that are 5,000 in options here. Which is crazy also. But so he basically did YOLO a lot of his money into it here. And, the hope is that Webull has earnings coming up on the 20th, I believe, of this week coming up. So he's hoping to make some good money there. I would be very, very careful with the full porting into Webull, especially with earnings around the corner here. Especially when you get close to earnings, maybe sell some covered calls against it just in case, because that's crazy to me. But again, just because other people YOLO does not mean you have to do it, guys. Don't do that. It's very, very much how you lose a lot of your money. You're already down about $8,000. Be careful. When other people YOLO, you do not need to YOLO. This one says, just hold, they say. And he bought call options on Netflix, and he's up 23 grand. Why would you hold this? It expires this week coming up. And just between Friday and then Monday morning when the market opens, you already are going to be hit with decay if you didn't already close this position out. So I would have closed this out before the weekend. Up $23,000, over 138% return. I would have closed it out here and just moved on. That's unbelievable returns. He made that money in about a week. I would have closed it out. Not even a week. It was a couple days. Close it out or to call it a day, in my opinion. Obviously not a financial advisor, not financial advice, but holding a short-term option over a weekend is very detrimental because you get a lot of decay in that option because you have 2 days of the market not being open, and now you're into Monday, and now you're going to lose more value potentially as a result of it. So hopefully it still makes money for him. I have no clue, but wow. I would have taken that money, honestly. That's just me. This person said advanced money Duolingo, an AMD reference here. Now, here's the thing that I need people to understand here. I did a little bit of research because of this. He has shares of Duolingo, by the way. So on the other page, that's what it is. That's all it is. He sold a cash secured put on Duolingo. I'm assuming it's cash secured put. I'm going to assume. For Duolingo at $265. Isn't it saying, wow, he's down $4,000 already? Yeah, well, here's the thing that's not being seen here. Duolingo had earnings November 5th. He sold this November 4th. Not only did he do that, he sold a pretty close to at the money strike before an earnings report. That's the problem. Because Duolingo was trading at like 270, 280, I think, around like November 4th. And then earnings came out and it crashed down to like the $190, $185 mark. But if you're selling a cash secured put around earnings, he's just hoping that Duolingo moons. Because break even is 236. That's not much of a move for Duolingo. So, well, that was the break even actually, but his strike was 265. It was like a 2-3% maybe move. I don't really know. I don't remember what the exact close date was on the 4th before their earnings, but you're selling a very close to at the money strike on a put option that's cash secured, hopefully, and before earnings. And this is what happens. Now he's deep in the money here. He could try to roll it if he really wanted to, but now he's going to be forced to buy the shares at 265. He gets the premium, which is great, but that is just like a very risky thing that you're going to be looking at doing here. Selling right before earnings is good, but you got to push that cost, but you got to push that strike price down for cash secured puts. You got to push it up for covered calls because you never know what will happen. Okay. So very, very interesting play here. Again, we'll see what happens between now and he still has, like 2 weeks before this expires here. So we'll see what kind of happens in the next 2 weeks for Duolingo here. But he needs to go back up to 265, which I don't think it will do at all. So he's going to be ready to get his shares assigned here. But again, be risky. Don't be risky. Be ready to understand that selling options around earnings can have a significant impact. This one, honestly, just long story short, he put $100K into this, it looks like, which is crazy to me. And just one thing to keep in mind about, guys, if you say I need a miracle rally, like that's already not a good idea. If you're out here saying I need a miracle rally from MSTR or else I'm cooked, and you're putting $100,000 into this, I don't have anything else to say. I really don't. I have nothing else really to say. If you're saying that you need a miracle, like that's not really, you didn't really go in with a plan, it seems like, in my opinion here. What you could do, though, you could sell some covered calls. You can sell 30 of them in the short term between now and January 16th. About 2 months. So you could sell some covered calls short term, maybe poor man's covered calls to kind of hopefully offset your cost basis. That's what I would do because you're down $86,000. You guys are making some money back somehow. So maybe selling some covered calls in the short term might help out a little bit. But yeah, that's absolutely crazy. And again, MicroStrategy is one of those very risky ones because it goes around Bitcoin and crypto and all that kind of stuff like that. And it has big moves some days. It's got big losses the other days based on what Bitcoin is doing. And you got to be ready to reap what you sow, and take that loss possibly because it's a risky stock with high implied volatility. So this person from January of 2020 to November of 2025 is now down $175,000. That's literally like a decent amount towards a nice house. In 5 years, down $175,000. This is the reality. This right here should be the eye-opener reality as to what some people face, right? Some people face this idea of like, I'm going to make it big on Wall Street. I'm going to trade options. I'm going to trade stocks. I'm going to make it big. I'm going to retire people early and stuff like that. But a lot of people when you're trading options, it's very, very risky. And look at what happens. Someone is down $175,000. You could have probably went down and you could have gone out and bought 2 real estate properties with some down payments there, probably some decent down payments, and then rented them out and built your real estate, portfolio instead. But, this is kind of what the reality was, it seems like, instead. So, absolutely crazy stuff, man. But again, it's the reality of it. When people are making money, someone's got to lose it. This is one of those people that lost all of it. This one I just kind of hate to hear because he bought Adobe call options, $100K worth of them, full porting it in a Roth IRA retirement account. And he only has till January for this to work. Like, dude, like give yourself some time. They have earnings in December. So he's kind of hopeful that the earnings are going to do great. I'm hoping, but he's already down $21,000 here. He needs Adobe to go up at least $40, which you're looking at a little over 10% return in Adobe stock between now and January, which is possible. But again, like your earnings is really going to have to play a part here, So doing it in a Roth, which is your retirement account, and you're full porting 100K into Adobe, I would have bought less contracts for farther expiration dates. That's what I would have done personally. But, to each their own, I guess. But hopefully it works out for you, my friend. I'm fingers crossed for you, but that's a crazy, crazy thing to see. This person says, thank you, Michael Burry. F you. Down 96%, down 55,000 in the last month. And what he's referring to here is Michael Burry comes out and announces that he's shorting Palantir and NVIDIA, I believe, and a lot of it. He's shorting a lot of it into the AI basically plays. And people are like freaking out. And what my guess is from this is that maybe he followed the shorts and they went the opposite direction and he lost some money. That's what my guess would be, maybe. I'm not really quite sure what his play was in this case. But if he was following Michael Burry, don't just follow people blindly. Even Michael Burry. Michael Burry is known for, calling the housing market crash of 2008. And he made a crap ton of money. Good for you. But you can look back and look at historical periods. He's tried to call the top of the market many, 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 many times. And he's missed on a lot of them. If I say every week I come on here as Fringe Financials and says, guys, this is the top. Guys, this is the top. Guys, this is the top of the market. I do it every single week for a year. At one point, it might be the top. I'm going to say, oh, wow, guys, look at how good I am. I called it. But he's been wrong. But I'm wrong the other 50-something times. It doesn't make sense. Michael Burry's tried to call it top of the market for years, and he hasn't called it right. But he called the 2008 housing market crisis. He made a lot of money on that one, so he's very, very intelligent. I'm not saying I'm smarter than him, but he's a very, very intelligent individual. But just because someone says it doesn't guarantee that it's automatically going to be the top of things. You just don't know. And so the fact that that's what you're kind of going off of is a little bit of a interesting situation there. So, this one's just funny. 50K worth of QQQ calls. I have no idea what I'm doing. Okay. Let's skip that one. It's like, okay, sure. This person's down 223,000 in the last month. So the guy we started off with was up 207,000 in a week. This guy's down 230,000 in a month. Imagine losing literally like a house worth in 1 month. I can only imagine what his option trading strategy is. Like, that is crazy to me, dude. Oh my God. The other guy was down 175. The other guy lost, what was it? Like, I don't even know what it was for Michael Burry. What was the Michael Burry one? He lost 50,000 last month. This guy lost 223,000. Like, it's just not fun sometimes for being in the market. And last but not least, I give credit for this guy right here. This guy put $100,000 around into Rivian call options, but he went to the furthest expiration date possible of January 21st of 2028. So he's looking at literally about 2+ years out for Rivian to go to $30. And he's already up, $23,000. Again, putting time on your side as an option buyer is what you want to do. If you're an option seller, you don't obviously as much, but time on your side is where you will make your money if you're buying options in the stock market. So the farther out you go, even though you don't buy as many contracts, you get more time on your side, which definitely is going to help you out in the long term. So that is it for today's video. This has been another crazy week of crazy bets courtesy of WallStreetBets on Reddit. Thank you guys so much for watching. If you did make this far in the video, make sure you like the video, subscribe to the channel, turn on the notifications as per usual. Hopefully you learned something new from hearing my advice. Hopefully you were able to see some ideas here and learn about maybe what you can do to manage your portfolio and stuff like that. Again, none of this is financial advice, but it just hopefully gives you guys some perspective as to what you could do to either, hedge your positions, offset your gains, offset your losses. All those kind of things are going to help you make some money in the market. As per usual, I do hope you are making money in the market. And as always, I will see you guys in the next video.